Hello guys, welcome to a new video, and today we're going to be doing a top-down analysis on the gold. Now let us this is on the daily. I'm a day trader. I do not need to go on the monthly or the basis. I stick with the daily as my high time frame. And as you can see, after gold printed this all-time high, we've had a push to the downside. Then we had this rally to this liquidity point. Now I was expecting this price to take out this liquidity here because there was a lot of liquidity here. Price took out liquidity, then pushed to the upside. But we cannot forget internal structure. When price took this internal structure of this move, it took that out. I was expecting price to take out another internal structure before we continue to push to either the upside or the downside following the news. Now I knew that this area, this down area here was a level at which price we want to take out. As you can see, price took it out and begin to buy from there. So anytime you are trading gold or anytime you are trading anything, you always have to look that price move from international to internal structure while following fundamentals. You need to understand that that is why gold moves. Gold does not just move because of anything. It follows fundamentals and it seeks liquidity. Once you understand it, you'll be able to trade gold easily. Now, this is on the daily. We've taken out the daily liquidity, which is actually the 4 hour low. If we go to the 4 hour, we're able to show you um what's we're looking at here. And as you can see from this area here, as you can see, price tapped here and started to push to the upside. Took out this liquidity, buy to the upside. Then we took out this low here since there was no liquidity, since there was no proper inducement in this high. Price used this 4 hour low as as an inducement level. Immediately we took that out, we begin to buy to the upside. So you see this happen over and over and over and over again. So price pulled back, pushed to the upside. This was a valid area of inducement. Price pushed to the upside, took it out, came to the extreme level here, and I caught that trade and we continue to buy to the upside. Now we bought to reach the daily area of liquidity. This is the daily, it was the area of strong liquidity. We took that out. Now we began to move to the downside. As you can see, this area here on the 4 hour was very, very, very valid. And this area was very, very, very valid. I got my confirmation here and I took a particular trade. I was up, then news fundamental came out and I had to switch sides and take the sales. Knowing full well that on the daily, this level needs to get taken out. So I took shots to here. Then as you can see, price took out this liquidity, then start buying to that again. Same thing happened over and over again. Once we've taken out top side liquidity, we'll pull back and take the downside liquidity. Anyhow you want to phrase it as, everybody have different concepts, but it's still saying the exact same thing. Liquidity needs to be taken from either one side to move to another side. Once you have this core concept and you apply to every of your trade, you'll be able to easily pass any challenge you have. So as you can see, price took out this liquidity area here, push tabs other block. Sorry, fair value gap. Here as you can see, we're having bullish momentum. I will not be surprised if price still comes back to tap this other block. I know that a lot of people are expecting buys from here, but you have to always take fair value gap over other blocks. So I'm expecting to see good. I'm waiting for fundamentals to actually kick in to actually see if this move can be sustained to creating your all-time highs or taking out this high. So that is short analysis on gold. I wish you the best and I wish you a profitable week. Bye.